Okay, sick. Let's go ahead. It's gonna pop up some charts. So this stream's for the beginner. We'll say the beginner. Pop this tab over here so I can see what's happening. And boom. So yeah, we're gonna check out XAU USD or gold or the gold spot. This is I have other pairs over here on the right hand side that you can see, such as GBP USD. Over here I also have Euro USD. These were two pairs that I traded pretty often when I first started off. Well, I actually traded a ton of other pairs when I first started trading, like Aussie dollar, AUD, NZD. I mean, you name it, I pretty much traded it at some point. And now the only thing that I trade is, yeah, what's up, fam? I wish I could add you. I just don't know how to add you to the stream. Can I add you as a moderator? Not sure what that does. Actually, just a second here. I'll grab my phone. Unless you're probably on your phone, then I guess that doesn't really matter. So yeah, anyways, gold is now the only thing that my friend and I look at. Mamapreneur, she's in the chat. So yeah, gold's all we look at. If you go back to yesterday's live stream, we covered gold pretty extensively, marked up a bunch of trade opportunities, and now since we're pre-market open, we're gonna go ahead and get prepped for the week. So we're gonna go ahead and drop down. Usually we always start on the higher time frame. Oh yeah, I see you're definitely the moderator now. So yeah, if you're coming into your weekly analysis, we'll just name it. I can't spell, so y'all bear with me. And also, I keep a separate page just for like markups. So though it's handy to have these on your trading screen, it's also better to go ahead and have like a separate page open so that way you can, look at your live market conditions and then also reference back and see what you forecasted. Not that it has to happen as gospel, but it's better to come to the market with a plan sometimes, in the sense of what moves you're looking for, so that way you can start to eliminate things off the table as the market progresses and price develops more. I got some tea, trying to knock off my caffeine usage, so tea it is. Weekly analysis. So we're going to start off with the 4-hour time frame. So as we go out to our 4-hour, okay, we had this flag, push up, break above price, 1, 2, 3, push back down very impulsively, another impulsive candle, another impulsive candle. But still really no significant lows have been broken on the 4-hour as of right now. So that's just something that we'll want to pay attention to. Okay. So again, no significant lows broken on the 4-hour, but it did break above, and then close back below here. So let's note that. Price pushed above, hold, 4-hour, high. Then it closed back below after a couple candles, very impulsively nature. No significant blows have been broken in the process. No taken. So now let's go ahead. We're going to jump onto the 1 hour. So as we go into the 1 hour, let me show you what this is. Okay. Yeah, we can take the drawings off the chart. We'll be able to find it again. It's okay. As price is coming down, okay, since there weren't any lows on this side other than this one that we were looking to fill, but obviously as price broke below here with this wick down, came back up, and now again making lower lows, okay, what I start to see, because again, like one of the main things that I'm trading are lows. I'm finding lows on the chart. Okay, so for instance, this one, this is a low I'm going to pay attention to on the 1 hour. Let's mark that as well. 1 hour LQZ or liquidity zone. That's a low that we're going to be looking for. And let's go ahead and center this. Boom. And we're going to go ahead and draw this on here and this on here, and we'll refine this as we zoom in. Okay, but yes, it's breaking lows, but it's forming a descending channel. Okay, so price is still in a downwards trend, but the descending channel gives indication that price is slowing down and starting to form with more structure as it's coming down into these bottoms. Okay, so we're noting that price is slowing down. So let's go ahead and pop back into our note. Price is in a descending pattern. Mean that it is forming structural movement to the downside. This indicates that price is slowing down as we approach lows. Also, when you're doing stuff like this, does not mean that it can't break to the downside. So though I'm looking at price as it's slowing down into this area, okay, so I'm looking for this 1 hour liquidity zone to be grabbed, and price is moving down there correctively in a descending nature, which most of the time means that like people aren't going to have opportunity to get into the trades because they don't really know how to navigate these type of patterns or this type of market movement. So we're going to kind of show you how to navigate that a little bit better. So let's go ahead and drop down to our 30 now that we have our 1 hour and our 4 hour marked. We understand that we're in a downtrend for the most part. We're making lows. Okay. And then we're going to tighten this up just like this. And I'm going to show you why I use this one too. 30 minutes showing the same thing as the hour. Okay, so we're going to use this area because price breaks through cleanly. Close here, immediate pushback above this area, and price wick down here before. So we're going to use this as our trend line spot because that's the first real indication that there is going to be some movement to the top side. So right now we have 1, 2, 1, 2, and we'd be ideally in trading in this type of pattern, you're going to be looking for a touch up here. But the market's not always perfect, so we're not going to force it into doing anything that it does not want to do. But let's go ahead and identify some of the patterns that you could have gotten into this past week. Right here, we had a flag, and it came down for a touch, which would have been this low that got missed, okay? So we're just going to follow price now. So price came down, formed this beautiful flag where you could have taken a reduced risk entry right there to this bottom side, okay, for potential more. But instead, we got this pattern right here at the bottom of this structure. Let me turn this down. Instead, we got this pattern right here at the bottom of the structure, which is now some people call it a pendant. And usually in areas like this is where you're going to get caught up in like not sure which direction that the market is going to go next. Okay, so what you do is you plan for it. If you did get a break below, okay, this is what we would really be wanting to catch. Is this exact same thing. You'd wait for it to break below, make some obvious flag where you could have targeted this 1 hour low, which coincidentally lines up perfectly. So this is what you would have been looking for a sell, okay, out of this angle, which could have potentially been a flag. But instead, here's why you'd been looking for a buy in this situation. Out of this flag, once we drop down to our 5 minute, you'll start to see the structure clear up a lot more. Okay, so there's your flag. You can see your flag a lot better now. And we would have been looking on the short term for this low to have been filled. I mean, which it did pretty much by a pip. Like it missed it. So it came back down, grabbed the low, and then we looked for the buy. That's actually what the screenshot or the thumbnail for this video is a screenshot of this trade. And then we would have been looking for the top of this trend line just because we know how the market moves to potentially get this upside here. But instead, what we end up doing was we took it off of this high right here, okay? This was the double top, or the last piece of price that got left behind. It spikes up, wicks up top, nothing ever comes back up and fills it before it drops. Usually, again, you would get some type of fill before it moves lower, but it didn't. It left this huge empty space, okay, where price never got grabbed. So we marked it off this high, and now since price comes back down below after not filling this high, let's mark this. Okay, delete. So price never wicks back above this, which is the high up here. Okay, it never collects any of this. And instead it comes back down and it takes out this low. So after we get indication that it misses high and it misses this high up here, okay, look at this. It never filled these highs. It never filled these highs. we were going to look for either a break above the trend up to this high, okay, or we were going to look for it to come up and we're going to take the trades off of this area. Now, being in the market long enough, this is what you would call mass psychology, this little area, okay? So price comes back up to the obvious area, makes people think it's going to continue to buy. It gives a strong buy up top. All the retail traders are getting caught right here. They get their entries just above this trend line. It triggers them in, and then immediately drops back into structure, takes everybody out of the market, okay? Now, if you weren't clear, I'll leave this for how we're approaching this buy setup. Okay, right here. And instead of immediately waiting, like trying to take a sell off of this liquidity area up top, instead of trying to take a sell as soon as price gets into this area, just because it's filling some liquidity doesn't mean anything. So instead, we patiently wait for the market to come back in, which it does. So now that we get price and it's broke back in, we're now looking for it to continue to come back down here and target these downsides, okay? We're looking for it to target these downsides, and it gave us that and much more, which that's cool with me. I'm not going to sweat. Also, there's the first wick down. Push up, boom, drop. That's our structure. Same for this here. So I know this sounds crazy, but once you have your first two touches on a trend line, you can usually abide by where this might fill. And if we need to back it with some type of price data, we can just look and see what's over here. And that's fulfilling 100% of this entire move right here. That's fulfillment of this entire move. 1, 2, 3. So price got fulfilled down here. But still, again, like keep in mind, this is the 1 hour liquidity zone that we wrote down on our chart. So let's move that over here so that you can see it. So we got price, and we're about to be caught up into where we are in today's market, which is more exciting. So you can potentially look at some of these for yourself and see how you feel about them. We're going to draw this here. If you're wondering why I'm using horizontal rays on some parts and trend lines on the other, it's because I use the trend lines in areas like this, okay, where it's more of a short-term trade. Like I'm not looking at it for anything longer than like 30 minutes to an hour. So those trend lines, I'm not just counting on to pull the majority of my bias for this trade. I just take them as a paperweight again. Little flag right there for it pushed up. Okay, so anyways, we got our rejection back in, but also when we got our rejection, check this out. Let's drop down for our final time. If you don't know, you probably don't, obviously, but we are intraday traders, aka scalpers, I guess. I don't know. I guess if you call 80 pips, 100 pips a trade scalping, then it's scalping, but it's not. This flag is so good. This flag is so good. So on my stream yesterday, I talked about like you sometimes need to read between the lines, and this is exactly what I mean when I say like read between the lines. So as the market broke this low, look at this, so gently broke it, came back up, double top, sell, that's a scalp. it broke this low, and it coincidentally came back down and fulfilled our liquidity on this part. Now remember, the liquidity that we grabbed for this, where we marked our take profit, is legit the exact same thing that happened here. Let's zoom in. Price pushed up, came down, pushed up, came down, pushed up, boom. Broke new highs here. That was our old high, made a new high in this area. Okay. But price never came back down and collected these lows. So crazy. So now, since this low never got taken out, that becomes our new take profit. So after price fails to go higher here, after price failed to go higher, and we got a break back below here, and it gave us this break below here. These are the main two crucial ones that you need to pay attention to. Dang, your boy's deleting all types of stuff off right now. Delete that off. Delete that. Let's tighten up our trend line. Boom, there. Look, once this low got broken, this was indication that the market was going to continue to sell off. When it was going to sell off, I have no clue. It's the market. It could have sold off like 5 minutes later. It could have sold off an hour later. But what you have to keep in mind is, depending on the time frame that you're on, is also going to indicate the time frame of how long you're going to hold your position, but also like the scale of the position that you're taking. So again, this is 1 minute, so I'm not going to wait three days for a setup to come. I'm already in motion off of a key play. So we're only waiting 30 minutes, 45 minutes before we're getting our next piece of structure. All right, so here, let's use our regression trend again. You're going to get shown a beautiful flag. Okay, again, read between the lines. Blur your eyes a little bit. It's there. And we would have taken our sell. For us, since there's not really, price came up and already took out these little bit of highs off of this candle, it doesn't have to come all the way back up here, okay? And that's indicated by this. So price forms this flag, and as soon as it gives this second rejection here and pushes back up, you can now look to set your sell just below that with your stop loss on the inside of the structure. Okay, and again, we're targeting our lows. That's 90 points. And there's our trade. And there are other opportunities to get into the market past this one, just this one trade. I think you would probably have to be pretty in tuned with the market to be able to spot those. But after this entry, I wasn't really looking for anything else other than when it came down here. We got this, again, slow movement. Set price forms this flag again. Price breaks out of this little channel. Drops here, breaks lower. Tags are low. Comes back up higher. Does not break our high right here. Okay, so we'll keep that in mind. And if it was going to break that high, it was going to come all the way back up to here. But we never got it. Instead, we got this flag. It comes back up. It fells it. It hovers right here. And again, we're looking for a sell back below this. Stop just inside of structure. And that's another trade opportunity in the books. So now price does the same thing here. We got a nice rejection back in. Price comes here. It makes a new high. It fells the low. We get push up. And there it goes. It's just kind of ranging. Pushes higher. And again, it takes out. Look, it still hasn't hit it. But catch what happened here. That was our first price that we were looking at. Price near misses it, comes back down below, and then guess what it does? Pushes up higher. So let's mimic this. I copied too much price. That's what we need. And boom, just like that. That was what we would be ideally looking for. And this is current market price now, okay? Or current market price. This is the 1 minute time frame. This looks like a ton of area that needs to be filled, but it's not. And when we come back now to our 5 minute, it's not so overwhelming. There's a lot more direction. Price broke our low. It hasn't given a real indication of which direction it wants to go. It's just kind of floating on this trend. Okay. We're going to go past our trend line. All right. Throw one here too. Delete this off. And we're going to throw one here. Scale back out. We're going to move this up one, and I'm going to show you why. Because we got to push up, push down, came back up, wick. Okay, that was our low. Then it moved higher, dropped lower, came back in, wick down below, new low was created, and it never grabbed it here before taking off. So this becomes our new target. Also, if we just scale out even more, on the 4 hour, okay, we have a miss low here. And there is a miss low right here. Let me show you those on the 1 hour though. Boom. So these are the lows I'm going to use as our targets for the 4 hour and the 1 hour time frame I scaled out. All the lows got taken here. Okay, look, price came back up here and then moved lower, grabbed it, and then it took off. Okay, so then it wicked down once and then boom. Never came back below, and now it moved up. And then it did it again here. Boom. Came back up. Here, boom. Came back up. The reason I'm not going to use, I guess, both of these, or it's going to depend, okay? So let's change this. It's going to depend because if the market comes back to this area, let's say here, okay, price breaks down, breaks below, and then comes back above and goes higher, then it would have been wasted to have my target here. Now if it breaks it, and it approaches this target like this, then comes back above. Let me just use my path. Okay, if the market broke and then formed another descending angle, or we finally got this, this would give me reason to use this trend line, okay, where I would kind of forego looking at this one as a target on this side, because it's now giving me indication based off of this that price has slowed down. Not only did it slow down, but it failed to break the low again, and then it formed some patterns to start pushing to the higher side. So I'm just gonna then would leave this target as like a rainy day target, I guess, if that's what you would want to say. So we're gonna go back over and now realize that there's still this downside. Okay, we still have all this downside, and this is kind of what I've been doing the past couple weeks is I'll mark predicted range area, okay, that I know if it comes back below and breaks in this, that I'm probably going to be looking for downside. Let me see if I can add some color back into it. Yeah, there. I'd be looking for trades in the downside if it breaks back below this area. And understanding like it doesn't have to continue, you know, it does not have to go all the way down here just because I drew some box on it. It's not how it works. It could just come back here and then decide it wants to go higher now that it's collected some more price, and then hit highs up here, form a bigger structure. We just use these as a reference. So we've got our box as a reference now. We're going to drop back down. And as you watch, like I'm not staying on one time frame. I'm going back and forth. Like I always want to see the bigger picture. If I get too zoomed in on the 5 minute or the 15-minute time frame, and I haven't zoomed out to see the 4 hour and the 1 hour just like that, I wouldn't really comprehend and be aware of how valid those take profit areas were, because now I'm so zoomed in to my lower time frames that I'm just going to miss the train in general. So sick. This high got taken out, so that's not even valid. Let's take off some of our structure now. I've walked you through some of those. And this is average market movement, y'all. Like this is what you're going to see every other day if you go on the gold market. And I'm not a huge fan, but sometimes it's helpful. Let's throw a fib on this, okay? And yeah, just above our last high is 50%, and just above that is the 618. And then up here is the 786. That's a full retracement, which would validate, like once it gets in this area, like breaks above our 50 and hovers here, we could be looking for top side. Okay, so again, if it now broke above our 50 on our fib and started to form some type of pattern like this, we could be looking for that for rejection back in, just like this, which would complete our descending angle, okay, because now we have 3 points of contact, or an Elliott's wave. And we would be looking for contact up here. delete. And let's go ahead and name these. So 50%, 0.618. We'll take this off. We'll take this off. And now we're going to scale back in. So now we can start to get a better idea for our entries and what we want in the market. So sick, that one's already there. And that one already got taken out. And here's our trend line, which was kind of getting broken. Okay. Which this is perfect because look, every retail trader was going to be looking for shorts in this position. Let me replay it. It wasn't a bad trade. Look, if you didn't know any better, we were going to target this low. Actually, let's go just 90% of this trend. Okay, we were going to look for a break. Get some type of retest up. And then we'd be looking for a sell-off. Okay, we're in a double top area. One, it missed it, came back up, it touched it, and you're getting a full close on this candle. Look at this. Boom, touches trend line. Every retail trader on this earth entered right here, which meant they had their stops just above this. Okay. And they were targeting this downside for a trade opportunity. And now this is what they get. Market triggers them, immediately stops them out. Boom. And guess where it headed? Just up here. Again, look, we had a push up, market came down. We had a push up, price never took out these highs. Look at this, instead it just sank. Boop. Just sank. So we now had this where all the retail traders were going to get into the trade. They missed the bucket. Now it's formed this little trend line. Okay. And now we're back at current price. As you can look, I love to see this though, because this is like where everyone freaks out because they're going to start rushing into the trade, right? The retail traders are about to get got again because now it's been 1 touch, 2, 3. Now they're thinking that was the fake out, and now they're going to get the pushback below, and then they're just going to look for the sell off again. Okay. But what really could happen is the market hits them with this little thing, maybe get some retail traders stuck on the side, pushes back up, gets this, and then we could take out some highs. And I wouldn't even trust this trade. This is on the 5. You know what I mean? Like, I would have to get a look, and we would have to get a clear break below here, form some better structure. Okay. Look for it, and you could take the sell off the top here, or you could take the sell off the bottom here and then take it down. But until you've gotten a break below 1, 2, even if it's just a wick, until you've gotten breaks below these lows, it's still in an uptrend. Look, yeah, it's the 1 minute, but look, it's still in an uptrend. Till it's broken this bad boy, like I wouldn't even look at it for a sell. So instead, I'm just going to monitor it like this. I want it to come back here, wick people out, and as soon as we get a pushback above and a little bit of a hover, dude, this paintbrush is not it. We get a break back below here, come back, and then we get this little hover, boom, to come back up to the top side. And just even off of this, if you're able to catch this flag with the long entry, now that you have like an obvious low that's been taken out, That's still a 25-point trade minimum, and that's if it doesn't come back up now and take out of this. That was our 618. Okay, and that's how I'd look to play this. I'm just going to wait for it to form a little bit more structure. And this is on the 5-minute. It seems like nothing's formed, but we could get a little bit of pullback and get some more structure. And either it's going to indicate some higher side potential, or we'll get a clear indication that she's going to sell off down into this area. And if it does, it's going to fill, look, at least another 60 points. You're going to be looking at basically another drop off like this. See? So now we sit and we be patient. The market's going to open up here soon, and usually we're not going to be taking any type of trades until, if we even do look at taking trades, it's not going to be until like 7 o'clock, 8 o'clock. Sometimes Asia will open up and we'll get some type of big moves, but even then, that's an indication. Like if the market opens up and immediately it gives something like this, okay, to the top side, where it fills this bid of price, you're going to end up with a bunch of this right there, a bunch of choppy price action. And then price will do something like this. Get you again before it finally moves down in the intended direction like this. So don't get caught in the range, okay? Just be patient. If it forms some type of pattern up top here, where it forms this another little like double top type thing, then you could be looking again. Just be patient. Set your trade back below this. You be looking for your stop here. And then you're looking for a minimum of 90% of this trend line again, okay? This original trend, it may just form like something like this, all the way up to the top. Who knows? But for right now, this is our trend line. And it would fill 90% of this, which was the low that never got taken. And that was before it continued to sink. And that is still 11.75% on a trade. That's 100 points with an 8 pip stop loss. Pretty crazy risk reward, actually. And this is on the 5 and the 1. So, like, it's not difficult to get an 8 pip stop loss, a 10 pip stop loss when you're using things like sell stops and buy stops. Yeah, so that's the market brief. If there's anything someone wants me to look at, I will look at it. Just because I trade gold doesn't mean I don't mind looking at another pair and giving my best opinion. Let's go ahead and let's just start up Bitcoin. This is BTC1. So this is the futures Bitcoin contract. So let's actually go to Bitcoin USD Bitstamp. Yeesh. And hopefully price will start to clear up a lot more. The more that you watch some of these streams, like the more you'll be able to start seeing very identifiable patterns. You know, like this guy up here wasn't that relevant. This one came back up after the drop down, so that became our new high. Price pushed down, came back up, formed this high. Let's drop down so I can show you why I'm choosing these targets. Okay. Price came down here, pushed away, came back up, took out this high, which meant it does not now have to come back up and fill this area. Yo. It can really just do whatever it wants, which it will. So this becomes an area that we're checking out. I'm not going to leave that entire box. That's fucking stupid. That's so dumb. I'm not going to leave an entire box on there. Let's delete this. Okay. So price comes back out, takes that. It's Gucci. We love to see it. And then, if I'm not mistaken, wicked up here, kind of took this little area out. But again, read between the lines. Look for stuff. Okay. We got a clear resistance in this area and a support, a huge support. Okay, so price kind of played around in this area and there's still a lot of price. So it kind of grabbed some of this and moved lower. But this is my main one that I'm checking out that I liked. This one and this one at 72,000, 70,000. All the rest of these look really good. This kind of became a new area because, again, it never touched this one and it never came back up and it never fulfilled this one. So instead, it kind of hit this little support area right there. And then it dropped lower, which now gave this the new high that got missed. Okay. As far as lows that have been missed, it's this one. Let's go down to our 4 hour. And we got a miss low of 58,000. Okay, look. Price wicked, came back, closed, took out this low. Okay, made a little flag, pushed higher. Price even dropped all the way down, still missed this low. So that is my target. And why am I not using this? And why am I not using this one? Pretty simple, because these are indicators. Like this is an indication to me that price never got filled, and this is an indication to me that now price has broken all these lows. Okay, broke this low and it broke this low, and then it broke it, retested, dropped here, indication that price wants to continue to the downside. Came back up and never grabbed that high, and it's just kind of floating. Let's see if I can throw some structure on it. Dang, look at that. It's 2 parts to structure right here. Only a seasoned vet is going to get you this. So this really becomes two patterns. So yeah, we're going to wait and see how Bitcoin reacts to these prices. And then I would be looking for some type of trade to the downside, depending on the break above and close back in. To then take it to the higher side, or we'd be looking for it to collect some price, drop here, and then target the lows. In this situation, I'm really just looking for a bunch of points in price that touched. It doesn't always have to go wick to wick, which some people recommend. In that situation, to be more like this. But I kind of like to have mine a little bit more snug and find multiple points in the market where it's touched, like this, and on top of this, and on top of this, and here. But also it forms structure in this area before it touches, okay? Like you want to see it form structure in these areas. Like that was a flag into this area. That's a flag into this area, break below, took out the lows, pushed higher, missed this, reduced risk, sell down. So yeah, possibly looking for some sell-off or at gold at 66. Wow, that's an unfortunate number. Let's go ahead and move that price line. Nope, made it worse. All right, looks like we're not going to escape it. So yeah, we'd be looking for a touch in here, maybe a little bit of price above. And then be looking for some sells back below here. Just like so. Easy peasy. But that's it for me. I'm done marking up charts. Hopefully you enjoyed the stream. It's an hour. Jeez. I didn't even drink my tea. My tea is probably cold now. It's cold. It's not very good. Sick. Well, y'all leave some comments down below of some pairs you want me to check out. Also, go back and check out where Bitcoin is this next week. Probably be surprised. Okay, with that being said, everyone have a phenomenal rest of your day. Peace. And stream.